Hey guys, what's up? Welcome back. Hope you had a good week in the stock market. It's Friday, October 22nd. We're going to talk about some DWAC again and some of the other SPACs that ran from Mr. Orlando's SPAC portfolio. Talk about GME, of course. Some technical analysis finally came down. Finally. It was predicted, but it happened. Sub up, like up, comment down. Happy money sticks around. We have a Discord as well as Twitter. Excuse me. You can follow us on Twitter at HappyMoneyYT and on our Discord. Raw, unfiltered sneezes. We've got a good pullback on GME today. I like it on the red days, honestly. I was just talking to someone in Discord and I'm like, red days I'm more comfortable with on GME because the cheaper it gets, the safer it is. The cheaper this investment gets, right? So on the red days, I'm like, I can get what I want for cheaper. On the green days, I'm like, I don't know, I'm not buying this. I don't feel like this is it. This just feels like a fake. I'm less comfortable as it gets more expensive. More comfortable when it gets cheaper. So I feel like that's a good mindset to have with stock that you want to go long on, you want to invest in. Of course, if you ever want to sell, you want it to be expensive, but not if you're not planning on selling. You want to be able to buy what you want for cheaper. If you imagine going to a store and you want to buy a PlayStation 5 and instead of it being $500, it's $400, you're gonna say, heck yeah, I want to buy it. You're not gonna say, I wish it was $600, that'd make me feel better about it. No, you want that asset, you want to hold it, and you want it for as cheap as you can have it. So when that PlayStation is $500 and you're gonna buy it, and then imagine if it went down to $400. Holy crap. Buy two of them, maybe sell later when it goes to $500. Now what if that PlayStation you thought was going to go to $10,000? Just saying. Exact same principle. You're putting money into an asset. Why wouldn't you want that asset to be cheaper when you put your money into it? So that's why I like the red days. Gives us a nice discount. It is overbought. We'll go over some of that TA. SPY did it just like actually we were saying yesterday. Today was the actual day it did it, in my opinion. And we're gonna look at it real quick here. 2008, called the Great Recession, big financial crash. We're gonna look at the charts really quick. We did it yesterday, but you see how this happened? Run up, little corrections. This all actually happened to be at the same time that the SLD period was, which is what, supplemental liquidity deposits. Coincidence? I don't think so. All these little corrections on the way up. Also correlates with GME. But this time we finally got something different that looks more like a top. Big volatility, a lot more volume, a lot more bodied candles. Here's your volume. Big bodied candles. Broke through that trend line that we'd been making, came down, made a total new trend, right? A new trend down. What we have here is a nice bounce off of that from this overreaction. Every reaction is overreaction. There's a dead cat bounce, whatever you want to call it. But it bounced so high, it made a new high. This literally is a new high. And if you watch just yesterday's video, I said we might make a new high, or we might just test it. And then I looked back at 2008, which I'm going to show you real quick. Did the exact same thing. Look at this. So the difference here, though, is this run up was much more mellow. We have a much steeper run up on SPY. So that means it's going to crash harder and faster. But nice mellow run up, hit a top. Big volatile drop. Oh no, things were scary, whatever. 2007, what's going on with the mortgages? We're screwed. Oh no. Oh no, it's fine. Everything's fine. New high. Look at that. New all-time high, just barely. And then, oh, I guess that stuff was true. Uh-oh, we're screwed. Slow meltdown. This took a year. So then the market was just bearish. Just like, okay, this is bad. It's no problem. Oh, it's really bad. No big deal. Okay, we're all screwed. This was the crash. So from here, October 2007 to October 2008 was literally a year of just the market being bearish till a crash. That happening this time, I don't think it's going to take that long, but this chart is so funny. You can literally just see the double top right here, and it's playing out, in my opinion, the exact same way. But look at how steep this run is compared to 2008. So I have this little correction, double top, and Now I think we're going to start coming down bearish and then maybe a crash at some point. But everything trades so much faster nowadays for a lot of reasons. I don't think it will take as long as it did in 2008. I don't think it'll be in a year for a lot of different reasons. However, I could be wrong on this. This could be, this little pattern right here could be another one of these. I don't think it is. I don't think this is what we are in at all, but it's possible. I'm thinking this is the double top we saw in 2008, and we're going to be bearish now. So yeah, that's the SPY. As you see, very unusual, big gap ups, all this just crazy stuff. Volume tapering off, meaning that move is not sustained and doesn't have conviction. Where's the volume? It's when it's selling off. People are selling. So yeah, it's coming down. I got bearish plays. We'll get into those options. GameStop, I was talking about it from back here. I said we're going to come down. This move does not make sense, and it didn't. None of this. I mean, just a couple days this would have been fine, then come down and retest and kind of build a consolidation. No, they did this big long range just to shake people out. This long 4 or 5 day rally up, new highs, higher lows, higher lows. So exciting. So exciting. Everything's bullish. No way. So I said like 173, maybe one little lower. I thought 165 is kind of that final support. You freaking apes. You got support at 169. And then I guess it went lower. But you got that 169 pre-market, literally right on 169, and then during hours, and then it actually made another lower low. GameStop, but this is a divergence, as you see on the RSI, so that makes me think this is the bottom, as well as this huge divergence on the MACD. So I don't think it's going to go lower, at least not. Yeah, I think that's the floor. I think we found it. So that doesn't mean it's going to go up now. That doesn't make sense. It doesn't go straight down and straight up. When you fall off a cliff, you have to crawl for a while because your legs are broken. You got to fix yourself up before you rally. So might see a little bounce, and then we're gonna find a range. We're gonna consolidate, and then we will hopefully rally. However, this could be a consolidation before another drop. That's how it works. Signs that are showing me that it's not going to be, our MACD is still bullish. Look at this. After these 3 red days and then a big gap down, big red day, 6.5% almost. It's not enough momentum to shift this bearish. Given on Monday, this will probably be bearish. Just because if we close here and then open up on Monday, kind of in that same range, that's going to be bearish. Unless if we have a big gap, kind of big day up to hold that thing up to green. That being said, today it couldn't flip it bearish. I actually was... I was excited and happy to see GME moving in extended hours. That's how sick I am. I was like, that's awesome. GME's finally moving after hours. We finally got... This was like a 6% move after hours. I was like, finally it's moving after hours. We're getting some volume. This is good. To me, this is just another step closer to the squeeze, so I want to see it. What I don't like is the low volume consolidation. It's just boring. It makes me think that they can do this forever. This is never going to end. When I see stuff is getting shaken up, that's what we want. Yesterday, after hours, we had bad earnings on Snapchat. It potentially affected all the tech stocks, but look at the Facebook. The Facebook, I just said it. That's a way throwback to the original Facebook. Look at that after hours. That's not from earnings. They're getting scared. When he's getting pulled out of these, potentially to help short down GME. Look at Amazon. That's insane. So, tech is selling off. Tech's getting scared. GME's going to come with it for an initial time being, potentially. TA on it. I think it's going to consolidate. It could come down more then, or it could just rally off of that. I don't know how far it has to come down before they're getting squeezed. Maybe not too far though. SPY on the hourly, we've got an engulfing red candle here, which is bearish, a double top on the hourly. MACD's been bearish since back here. And then of course on the daily, we've got this massive double top. So it doesn't mean it's gonna crash tomorrow, although I do have exposure for, well, not tomorrow, but Monday. I do have exposure for Monday, because I think we will probably gap down some. But it'll probably gap down, bounce, consolidate, and then start descending after some consolidation. I would say if we start consolidating on Monday and it kind of holds up and then breaks through this again, it's quite possible we're in this range and we're going to keep ripping. I don't think we're there though. Powell talked today about tapering. I don't even know what he said. He just talked about it, and that was all the market needed. That kind of started shaking it out. GameStop's looking nice in the 5 minute. Coming back up to VWAP, it looks like we've got 15 minutes left. It's a good discount. If PlayStation 5s are all of a sudden $100, you wouldn't be like, oh, I don't want that anymore. It's only $100. No, you want that asset. So why would you want to pay more for it? You want to pay less for it. It's not exciting or fun when it's up here at 230. You don't want that, right? DWAC, yeah, I think this will be a good swing trading play for sure. Wow, on the hourly, I mean, if it wasn't so overbought, it's not bad. It's kind of like a bull flag without the pull because it just gapped like crazy. Still speculative though. This CEO of this SPAC, actually, his other SPACs ran today. Mark was one. There was a lot. There was like 3 or 4 different tickers that were all. One would just rip rally, it'd halt, and then they'd move to another SPAC that was in his. So it's clearly just kind of crazy hot day trading money and hedge funds just pumping around and I don't know, helping out their liquidity problems. But there's people day trading and making money on this stuff, and once you get just kind of a wild day with volatility, you're gonna get a lot of traders taking advantage of that. Hedge funds and just retail day traders, both sides. GameStop looks beautiful. Let's look at our options. So we were calling out bearish. The last 2 videos I said GME is coming down, GME 174, GME is coming down. Doesn't mean you go short the stock, but you could have sold covered calls, could have debit spreads, I don't know. But hope you had a heads up. Hope you weren't too freaked out by the drop today and were pumped. I did get some dip buys today. I thought maybe we might just hit a low and then shoot up. Too much volume today. It held us down. So, which is good. I'm glad we had that volume. That's good to see volume coming in, even though it's bearish. So I got calls for today, which is fine. Whatever. We didn't have the bounce rally. If it traded like the other day where it's just low volume and you can see it, just the algos trading it like we had back here, and then when volume comes in you just buy it, then yeah, I think it would have pumped up, but we didn't have that today. We just had steady volume all day and just a grind down. Let's look at history. Wow, there's the calls. I sold my IRNT, so unfortunately I opened up a lot of bullish plays, it feels like, in the last week. Of course, once everything feels nice for a few weeks, then you're like, oh, I'm gonna go bullish, let's do it. Not to say these bullish plays can't still be bullish with the market coming down, but if it's a heavy downswing, it's gonna be difficult for them to swim upstream, so to speak. IRNT looks like another false breakout, just like it happened back here. Technicals are right on it. This is one reason why I like, even if I'm trading short term, like on an hourly, I like to still important to look at the daily. So if the daily trend is still bearish on the MACD, red under the 9, if everything's still bearish, to say the hourly is going to continue to rip and the technicals on that are going to flip and make the daily flip, that's bigger. That's a bigger move that typically, that's not as likely. Now one like Kodak, see, this was bullish. This has made this divergence on the daily. We've got everything's bullish on this, on the daily, and I'm trading on the hourly chart. So when I got on this on the hourly, it looked good still. Then it got bad on the hourly, no problem. Went overbought, oversold, back to the daily. MACD is actually still good, so I think this play still has life in it. I don't know if my plays will work on it, but this play could still have life in it, honestly. So we'll see what happens with that. But I like this one better. Guarantee skills. I did a put credit spread on skills. Problem is, again, if the market comes down, money's going to get pulled out of these speculative stocks. This one isn't as speculative, but I don't know, maybe it is. It's kind of a growth play. Bull flag here on the hourly, very nice. Daily, we've got everything we need for a rally. Could have just went with calls. Options are, Ivy's about 100% on those. I'll just do my put debit or put credit spread. That's a 10.50 10 put credit spread for, I think, next Friday. GME, I closed out of our put debit spread on that, made, I think that was 1,300, so pretty much max gain on it. I actually closed it out early. Could have made more if I waited, but I thought we might have a big bounce, and those expired today. And then I even closed out of the other put debit spreads on GME for next week that I opened up yesterday, just because they were up 60%, and I'm like, if we have a bounce from here, there's no reason to try and hold those till next week, because I'm not sure if GME's going to close below 175 next week. I feel like we might Might consolidate higher than that. I don't know. So I just 60% on the debit spreads. I'll close them out. It was probably a couple grand on those, and I'm happy. Now the move is so oversold though. I'm not going to open up a bearish play. Not for now. Oh wait. I opened up a couple bullish plays. We do have this divergence. You can see it here on the hourly too. Right here and here and here and here. So yeah, no bearish plays. It didn't sell any covered calls today. No problem. I mean, it was a big gap down, never bounced. Not even gonna mess with it. Oh, I rolled. Is this a roll? I think so. I rolled my call credit spread on SPY. It expired today. It was a bearish play, but I think it was gonna expire in the money. I think that's what this is. I'm not sure. Tesla. I went short on Tesla. Elon, don't murder my children. Tesla broke out all-time highs, but looks a lot like the SPY to me in that sense. I think it's a double top. Way overbought here. I'm a Tesla bull in the long term. We've actually got a divergence here. I didn't even notice. Divergence here to the downside, right here and here, even though that is a bull flag. We'll see. I think this one will come down. I have got some time, maybe a week, couple weeks. This I've got 2 weeks on it. It's 870, 875. What credit spread? Did I do that right? Oh, that's a debit spread. Just vertical. Oh, it's a debit spread. Premiums are low, so I did a debit spread. Max profit 1100, max loss 357. Needs to be down at 868 by expiration. See what happens with that. SPY. I opened up lots of bearish SPY plays, varying strikes, varying dates. GameStop. I got calls on GameStop. I have calls on GameStop. I got 10. It's crazy actually these are gaining value. I think it's just the spread. The spread's been widening. But yeah, I got 10 of the 305s for 2 Fridays from now. I don't expect us to do anything too crazy by then. We could just consolidate for those 2 weeks, honestly. However, there is a however. There is a chance that we do something crazy. So if you remember back here, remember this? From this gap down earnings, and then this really weird rally right after that was strange. There's a chance that stuff like this happens. And also, if you noticed, I remember back here, February, March, it's always like, oh, the end of the month, GME is going to rally. It's always at the end of the month. And I was just waiting for the end of the month. We didn't know why, or I didn't know why at least. I guess I still don't know why, but look at here. This is January 2022. This is February 2024. That's not the end, but it started there. And then there's some end of the months that don't. So then it's like, okay, it's going quarterly. You know, future swaps, whatever. This is March 25, end of the month. So liquidity, deposit requirements, that's it. Options, expirations, I don't know. 24. See what's happening here? See this pattern? Might be premature, but we might rally next week. TA is not telling me that, other than just the patterns we've seen at the end of the month. So that's kind of it. And the fact this hasn't flipped bearish yet, so we'll see. We'll see, mate. I got some exposure to it. Whatever. It's cheap. IV is low right now. These were cheap. So those are 305. Yeah, way out the money. I know. Yep, it's crazy. It's crazy. It's not gonna be crazy when we're in the thousands. 305 would be like, wow, that's such a good deal. Yeah, I'll show you all the SPY ones. I did do a little scalp on DWAC today. I shouldn't have done it. I got out, lost a little bit of money, and remembered why I don't do that. SPY. So here's our bearish plays I have going on. This one, I have ones for Monday. Call credit spread. So it has to be below 452, no, 453 on Monday for GameStop or SPY. So basically, I'm just expecting it to come down at least a little bit by Monday on that one. That's right here. That's 450. We got this 452, 452 and a half. That's for next Friday. So yeah, that one has to be below 452 and a half. That's a little bigger one, I think. This one is 1100. Max loss is 861 because it's pretty close to the money. So, and then I've got this one for 21 days. This is the one I rolled. So that one's, I think I need max gain on that pretty much to get it all back. Those are the SPY plays. And then we also did, where's the little DWAC, SPY. I opened up SQQQ and SPXS. These are leveraged ETFs. I get burned on these so much. I just love to do it so much. November for SPXS, 23 calls. Not crazy out of the money, but not that close either. So this is, I think, a 3 times leverage. Yeah, S&P 500, SPY, same thing, S&P 500. So basically the exact opposite inverse chart of what we've seen. So yeah, this isn't showing signs of reversal yet, but it just, you know, I've seen the SPY. I think it's a double top. I'm trying to time the top a little bit here. Shame on me, but I am trying to a little bit. SPXS, and then yeah, see all these bullish plays. Pay safe route. I've got time on these, but if the market comes down, it's gonna pull those with it. SQQQ calls October. These are next Friday. $8 calls next Friday. So this is the NASDAQ, I believe. Leverage short position on NASDAQ, $8 by next Friday, which it's not a crazy move, but yeah, this one might be the only one that works actually. So I shouldn't really, it's not typically a good practice to set up plays on Friday because nothing happens by Monday. You've just lost two days of time decay, unless you're, of course, you're selling the premium. But I didn't. I opened them up on Friday because today I think was that final blow off the top day, and I think we'll see some movement on Monday, Tuesday, Wednesday. I think we're gonna start seeing it. I think that's all the plays. GME, new price target on the downside. I hate price targets. I don't know. We didn't cross bearish today. We did set up this divergence. Doesn't mean it has to respect that, but that is signs of a floor. We do have support back here right at this 168. Might come down a little further, 166. If anything, though, it's going to consolidate before it drops down more. It's not just going to keep falling, I don't believe. So consolidate some and then maybe drop more, find support. If it doesn't find support after it consolidates, we're looking down here in this range somewhere. 160s, 153, 146. One of these supports down here. And then your favorite asset will get cheaper. And then what that will do is that'll put us in this range, this massive range, if it finds support there. The range will be 228 and 145 if we get there. Is that not locked? Where did that come from? Yeah. So, yeah, I'm not sure though. I feel like we're going to hold up here. And if we do, then we're in this range. Probably this little range right here at 188. 167, they can bleed all the premiums out, and then we rip rally up. Either or down. Big market crash comes, this might come down to that 145. And stuff's gonna get cheap. Discount. Thanks for watching, guys. Sub up, like up, comment down. Happy money sticks around. We'll see you on Discord this weekend. Have a good one. Peace out.